Welcome back. Let's take a look at how the markets are performing now. And China stocks eased this morning, but posted their third straight weekly gain on improving relations between Washington and Beijing after they reached an initial trade deal last week. As the initial trade deal removed some of the uncertainty over that China-US tariff dispute, investors turned their focus then to the health of the world's largest economy and Beijing's policy moves, indeed keeping rates on hold thus far. China's economy could, however, face more downward pressure in 2020 than it did this year, but the government says it will take steps to keep growth within a reasonable range. Hong Kong stocks ended higher as well, recording their third straight weekly gain. Markets in Asia mainly weaker across the day. Japan's Nikkei managing to close down, unfortunately, there, 0.2% at 23,816 points. It was a much better day, however, in Hong Kong as that market reached for 28,000. It did rise 0.1% by close. Mainland China, however, down 0.4%, so the Shanghai Composite is just above that 3,000-point mark. Over to the United States now. Wall Street's major indices resumed their rally with fresh records last night as U.S. Treasury Secretary Steven Mnuchin said an initial U.S.-China trade deal would be signed in early January. We'll see if that happens. The benchmark S&P 500 hitting what was a sixth straight all-time high, its longest streak since January 2018. The bulls keep raging on, with the Nasdaq also ending with gains for the seventh straight session in a row. All of Wall Street notching up record closing highs. The Dow Jones Industrial 0.5% to the good, while the S&P 500 gained 0.45%, 3,205 points there. Remember when we couldn't even get to 3,000. The Nasdaq Composite added 0.2%, 8,887 points. Let's shift our attention to that European market picture now. And of course, the significance here has indeed been where Brexit has led and how the markets are really going to fare when it comes to that. But positions are now finally been taken when it comes to the easing of where things are kind of sitting and standing right now, particularly with the FTSE 100. So the question becomes how far things go on that European front. So we'll see how those markets fare there. On the local index, however, Friday, not necessarily a good day for the all share as it manages to dip down at present. It had headed for 59,000 points, and that was the hope, really, but now sitting at around 57,400 odd points. Below 70,000 points for the industrials counter. A lot of questions will be asked around Prosus then, of course, which slightly has that minuscule impact then on Naspers and just how things are faring. It is a split off of Naspers, of course. Prosus itself deciding to go for a company called Just Eat out in the United Kingdom, the online food delivery platform, and that just means that they've decided to up the ante a little bit, offering 150 Rand or thereabouts per share, 800 pence in England, and that would value the company, that's Just Eat, at £5.5 billion. Now, we saw competition come through by the way of Takeaway.com deciding to put in their upping of that offer as well, raising it to around 172 Rand per share or 916 pence. And that has then meant that you've kind of found that the price of Just Eat has certainly skyrocketed. How much more this will cost is going to be a keen question now. Takeaway.com is saying that they have at least 41% shareholders, 41% of the shareholders agreeing with them and saying that perhaps we should take on your offer. Is it worthwhile in a market that is perhaps not as high growing? Of course, we're still in between a Brexit challenge. You don't necessarily have to go into the United Kingdom in order to secure your spot across the European continent either. So is this perhaps just an overpriced deal? We'll soon find out. On the financials front, on the local bourse, however, that is sitting down as the banks continue to suffer somewhat. Onto the resource shares then. Well, they've certainly done a little bit better, perhaps some demand seeping in. A lot of them, of course, considering where exactly they sit as they head into next year, having reconstructed their businesses and restructured exactly how things fare, whether it be in terms of operations, employees, or assets within the business. And also quite significant with regards to that gold counter is Anglo Gold Ashanti. Yesterday, having reached as much as 3% higher on the day, has certainly helped that company move beyond around 100 120 billion rand with regards to market value. The significance there is because their Obuasi mine in Ghana has started to have their first gold pour out in about 7 years. Of course, it was closed around 5 years ago when then CEO of Anglo Gold Ashanti, that's Srinivasan Venkata Krishnan, had decided to perhaps close things down because they couldn't afford to keep subsidizing what was a loss-making mine. But current CEO, however, Mr. Dinishki, says he believes that it certainly will help the company. And the metrics of that Obuasi mine in Ghana are certainly good. So it seems like things are back on in Ghana for Anglo Gold Ashanti, boosting that share price and, of course, diversifying its markets continuously. So, too, then, does the gold counter head higher. But how has the gold price itself done? That metal, taking a look then at the resources, as you'll see that those have continued to head much higher as well of late. And that has been a reason, the reason for that, should I say, has been because of demand. And what has continued to happen there is that even though gold has run to its hardest, as we take a look, perhaps, if we can take a look at the next board there with regards to the commodities, rather, we don't have those right now, but we'll take a look at how things have fared there. Just over 1,400 US dollars on that front for the gold price there. There it is, $1,477 a fine ounce, $931 for platinum, slipping just a touch. And that oil price, having had what is now a third week of solid gains for that oil price. For now, however, today just headed lower, sitting just below $66 a barrel. Going back then to the currency picture, well, you saw a flat stance for South Africa's rands at 14.21 against the US dollar. Of key significance here is that it started the year at 14.37. So how important is it that South Africa was able to appreciate its currency this year? Perhaps internally, manufacturers not liking it so much. 18.54 for a British pound, still some weakness there, and 15.79 then for a euro. Quick look at the BRICS currencies as well. Those have certainly headed in a much better stance of late, and those continue to perhaps sit a whole lot better. Over into that European market, as I said, these doing quite well. Well, that takes a look at rather a fair gander at how things have fared across the market picture. It certainly has been quite interesting. Of course, from me, it is goodbye for now. My colleague Nzinga Qunta will have your economic news as well right after the short break. SME on point as well, also following through right after that. From me, South Africa, that's where the buck stops.